Good afternoon and welcome to the ASEAN Midday Market Watch. Our guest today is Kelvin Wong, Market Strategist at CMC Markets. Kelvin, great to have you on the show.
Thank you, Brian. Yeah.
Now, Kelvin, before we speak to you and get your insights, let's take a quick look around regionally and see how markets are performing. Now, it's mostly green. Nikkei is trading at 26,792.36. It's up marginally at 0.13%. The Shanghai Composite is trading at 3388.24. It's up 0.63%. The Hang Seng is at 26,481.79. It's up 0.08%. ASX 200 is up 1.04% at 6,748.7. And the outlier at the moment is the Kospi, which is down 0.42% and trading at 2,760.13. Now, closer to home, the SGX is at 2,860.9, down 0.41. And the Bursa Malaysia, it's down 0.53% at 1,672.54. Now, Kelvin, what do you make of the regional market performance this morning?
Well, I would say overall it's still pretty much of a positive risk-on behavior. So particularly two kind of a catalyst that is driving this ongoing risk-on behavior for our ASEAN stock market in general is number one, US stock indices are still pretty much positive, even though we have a kind of a mixed session yesterday. The leading, we call it the high beta leading index, which is the Nasdaq 100, actually posted a fresh all-time high. But we see kind of a more like a muted losses on the Dow Jones and the Russell 2000. And also on the economic front over here is one thing positive is investors or traders are now getting more optimistic of this toned down or skinny US fiscal stimulus, which is slightly below 900 billion. So as we are speaking right now, there are actually kind of ongoing news flows that are showing signs of encouragement between the two camps. That means the leaders on the Republican side and the Democratic side are now trying to iron out their differences. And media reports are starting to say that the differences are getting narrower by the day. And hopefully by weekend, they're able to actually pass this toned down 900 billion bill before the Congress going to recess or a break in the third week of December, which is next week here.
Now, Kelvin, I've got to ask you, have markets already priced in this toned down bill, the stimulus package?
So, yes, so I think what markets has kind of is really kind of a price in, more or less. I mean, I would say not really fully priced in. I would say perhaps if you look at the way the price movement is about 60%, because in the last few weeks, right, there are still talks about this particular bill that is being what you call thrown aside before Congress starts to kickstart the new season next year. So there's still about 40% chance that there will be still a no fiscal stimulus bill before the recess kicks in. So I would say that if this, yeah, so it's not really fully priced in yet, as based on my we call it okay, yeah, sorry about that. Yeah,
go ahead.
Yeah. So basically, in my opinion, right, I still believe that the fiscal stimulus, the toned down one, is not really fully priced into the market yet. At most, let's say 60%. So I believe that a positive scenario can still give a kind of a bullish boost for the stock market, the US stock market, then creating a positive feedback loop into our ASEAN market as well.
Now, on a different note, Bitcoin has just passed the $20,000 mark for the first time ever.
Yes.
Now,
yes.
Essentially, market analysts have basically said that you could basically explain by the fact that compared to the last time, which is very retail investor driven, now the drive is coming from institutional investors who are purchasing Bitcoin. Now, what's your view on Bitcoin as a whole? Are institutional investors in ASEAN and Singapore in particular in the game, or are they adopting a wait-and-see approach?
I believe that if we look at Singapore biggest bank, which is DBS, so DBS actually last week they announced they officially launched this DBS digital exchange, which actually allows trading of Bitcoin, Ethereum, the second biggest, and Bitcoin Cash as well as Ripple in this exchange. And so this Bitcoin, this cryptocurrency can be actually exchanged for fiat currency as well, like the Japanese yen, the Sing dollar, the US dollar, and even the Hong Kong dollar. And
Okay.
I believe that over here is that it's pretty receptive, and this current exchange, right, is only allowed for institutional investors and accredited investors. So we already start to see a kind of interest or demand in our region, is ASEAN region, to actually inquire about this cryptocurrency, which means, i.e., we could actually start to see a kind of a significant push in terms of portfolio allocation towards this cryptocurrency in the near future. So I would say that ASEAN investors, especially on the institutional side, and right now on the accredited side, they're actually getting pretty much keen interest or demand to actually invest or start to trade in this cryptocurrency. So I do believe that going forward, there could be still further upside on Bitcoin. And in fact, if you look at yesterday's news, the second biggest value in terms of market value, Ethereum has started to see pretty much a fanfare as well. Also driven by the Chicago Mercantile Exchange (CME). So CME will officially launch Ethereum futures next year, February 2021. So that actually also sparked interest, institutional interest into this crypto space at this moment in time. So I believe that the momentum has slowly started to build up, and it shouldn't fade so soon.
Okay, that's interesting. Now, moving on to the pound, that's reached the 135 mark yesterday. It's its highest level in 2 years. Now, obviously, that's a Brexit deal optimism being priced into the pound. But are you long or short on the pound?
Okay, because if I were to look at the purely technical analysis perspective, right, I'm slightly bullish right now, given the price action of the pound has changed over the last week or so. So if I'm looking at this, there's a major resistance at 135.40, which hasn't actually breached instead. Well, yesterday it tested there, but it did have a daily close above. So if you could start to see a daily close above 35.40, it could take us higher to 36.65/38.50 with the key support at 1.3160. Then we're talking about the Brexit front. Okay, so Brexit over is a kind of a binary event, you see. So anything can just happen over the weekend.
Yes.
Because if you look at this situation right now, everybody is playing a kind of a brinkmanship, hoping to get the best deal from both sides. So yes, even though yesterday key EU officials have sounded relatively positive in terms of their tonality as compared to a week ago. But however, if you look at the UK side of the story, right, the Prime Minister PM Boris, he's still pretty staunch on certain issue, especially on the fishery issue, that he's saying that, hey, UK still wants a best deal for themselves. Anything that is not within their expectation, they could actually walk out of the deal. So that is his stance, you see, even though the EU side are getting more and more optimistic. So I would say that it's a kind of very binary event. Anything could change. So that's why I'm more watching on the certain levels. Let's say, for example, if this sterling dollar, the pound against the dollar, is able to hold the 31.60 support level, perhaps even though we don't have to see a very positive Brexit deal on the weekend, they could actually kick the can down the road. So it's more like a going forward. We start to see more like a sideways configuration again, between 31.60, top side will be kept by 35.40. Yeah.
Now, Kelvin, what's your target range for oil prices in Q1 2021? Now, the reason for that is basically the US Energy Secretary has warned shale producers that they should be worried that the new Biden administration is going to be more ESG focused. Now, what's the view on Asia on this? Because that's going to, any sort of movement in shale is going to impact the OPEC Plus ability to control oil prices.
Yeah, so if you were talking about in the last few, maybe about 10 years ago, definitely US has a kind of grown into a very major oil player, producing lots of oil, especially the shale gas, the shale technology. So if you're talking about if right now, if Biden were to come in and say, hey, right now I'm going approach to do more of an ESG approach, so definitely shale production will be lesser in US. So this where in the more longer term approach, this is where OPEC itself can have more say in terms of the supply of oil price, right? So in fact, it's actually positive for OPEC Plus in terms of controlling the oil prices. Okay, so but going forward, right now over here is that in the next quarter, there will be a tussle between, yes, you see ESG coming into the picture, where actually we may start to see lesser demand on oil. Okay, because US is trying to lead this the green approach on using less oil. But however, the market will be focused on a recovery play. We're talking about vaccination. Okay, so the next Q1 we talk about vaccination. How does vaccination trigger down to pent-up demand, which could actually see a kind of a positive feedback loop if impact indirectly towards oil prices. So for Q1, right, I still do expect oil prices to creep up slightly higher, perhaps towards this 60, 65, 60 level. Then thereafter, right, markets got to start to actually decide, hey, how does Biden's ESG approach impact oil prices as a whole? So from there, right, perhaps we may start to see a more of a sideways movement in the later part of the year, which is the second half year.
Kelvin, thank you very much for your insights.
Sure.
We've been speaking to Kelvin Wong. He's the market strategist at CMC Markets on BizTech's ASEAN Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia for business and technology conversations.